While I was at Stanford, one of the things that really we got questioned on is, what really matters to you, right? And why? What is it that you really want to do? I narrowed it down to, I want to help bring ideas to life. First and foremost on the African continent, but just generally speaking.
After working for a few tech companies in America, Oviezu headed back to Lagos on a search to find an idea he could bring to life. And it didn't take long before he found one.
Is AI-powered fintech a blessing or a curse for Africa? Fintech, short for financial technology, refers to innovative technologies used to enhance and automate financial services. As traditional banking crumbles under the weight of inefficiency and lack of innovation, a new era of digital finance emerges, promising to liberate millions from financial exclusion. The winds of change are sweeping across Africa's financial landscape, bringing with them a storm of artificial intelligence. Traditional banks are struggling to keep up with the rapid pace of technological change, facing challenges such as outdated infrastructure, high operational costs, and limited reach in rural areas. This has created an opportunity for fintech companies to disrupt the market with more agile and cost-effective solutions. But beneath the surface of progress lurks a shadow of uncertainty and potential chaos. In a continent where over 350 million adults lack access to formal financial services, AI-driven fintech offers a glimmer of hope. This staggering number of unbanked individuals is due to various factors, including lack of physical bank branches in rural areas, high account maintenance fees, and stringent documentation requirements that many Africans struggle to meet. Mobile money platforms and AI-powered credit scoring systems are reaching the unreachable, but at what cost? Kenya leads the continent in mobile money adoption, with M-Pesa serving as a pioneering force.
Money is turning mobile, and my country, Kenya, is leading the way. Only 4 million Kenyans have bank accounts, but 10 million people here use the M-Pesa money transfer service. This shop is one of 17,000 agents throughout the country.
Customers come and do M-Pesa transactions. They either deposit or they withdraw cash.
Customers transfer money electronically using their mobile phone, and the agent converts it into Kenya shillings. Safaricom launched M-Pesa just 3 years ago, and already half the adult population is using it, many to send money to family living in the countryside.
I don't have to travel from here to Murang'a to take money to my parents. I can just send it from here. And within seconds, the cash is in their phones and they are going to withdraw it and enjoy themselves.
When I'm away and the workers need to purchase maybe a material or something like that, I do have to go where they are. I just send money to them in their phone. Then they will withdraw it wherever they are and work is done. So I find it very efficient.
The success of M-Pesa can be attributed to its simple user interface, extensive agent network, and the regulatory support it received from the Kenyan government. Other countries like Ghana, Tanzania, and Uganda have also seen significant growth in mobile money usage, driven by similar factors and the increasing penetration of smartphones. As one Silicon Valley guru cryptically warns, when you open the door to financial inclusion, you might invite unexpected guests. With every transaction processed and every data point collected, the attack surface for cybercriminals expands exponentially. Cybercrimes in Africa have increased at an alarming rate, with some countries experiencing a 76% rise in attacks. In the second quarter of 2023, Africa faced the highest average number of cyber attacks per week per organization, with a 23% increase compared to the same period in 2022. To combat this, initiatives like the African Union Convention on Cybersecurity and Personal Data Protection have been introduced.
Thank you so much to the African Center for Strategic Studies for the invitation to join this very important conversation. And I would also like to extend my greetings to the participants from the security sector who are participating in this seminar. And thanks to Professor Nate Allen, who has also covered immense grounds on the cyber threats landscape in Africa. Now, when we generally talk about cybersecurity, I think it's always important to contextualize on regional perspectives, and that is why I'm always excited that we are able to discuss Africa. And this is very important because when you think about cybersecurity, you find that the reality of developing states, for example, those in the African region which are at the end of the digital divide, tend to lack the adequate capacity, skills, and infrastructure to effectively ensure cyber resilience. I've just come out of a UN Security Council meeting, and that subject resonated as to how the lack of capacities is sort of hindering posing challenges for detecting, defending against, or responding to malicious cyber activities, and why it is important that we consider cyber threats in the context of country-specific and regional-specific realities.
But only 14 countries have ratified it so far. AI systems, once thought impenetrable, now reveal chilling vulnerabilities that could bring entire economies to their knees. A shadowy figure in the cybersecurity world whispers, "We're building a digital Jenga tower, and we don't know which block will cause it all to tumble." As AI algorithms feast on the personal and financial data of millions, a sinister question arises. Who controls this treasure trove of information? From targeted advertising to social engineering, the potential for manipulation and control is both vast and terrifying. An anonymous data scientist ominously states, "We're not just predicting financial behavior, we're shaping it." As chatbots replace customer service representatives and algorithms make lending decisions, a wave of unemployment looms on the horizon. AI-powered lending algorithms analyze vast amounts of data, including traditional credit scores, social media activity, and even smartphone usage patterns, to determine creditworthiness. While this can lead to faster and potentially more accurate decisions, it also raises concerns about privacy and fairness. Projections suggest that by 2030, up to 30% of current jobs in the financial sector could be automated, potentially leading to millions of job losses across Africa. The promise of new, high-skilled jobs in AI and data science offers little comfort to the masses facing obsolescence. A labor economist grimly notes, "We're not just disrupting industries, we're disrupting lives." AI systems, trained on historical data, risk perpetuating and amplifying existing biases in lending and financial services. The dream of objective, data-driven decisions gives way to a nightmare of algorithmic redlining and digital discrimination. For example, if an AI system is trained on data that reflects historical racial or gender biases in lending practices, it may perpetuate these biases in its decisions, even if race or gender are not explicitly considered as factors. A concerned ethicist warns, "We're not eliminating human bias, we're automating it." This automated discrimination can be more insidious and harder to detect than traditional forms of bias, as the decision-making process of AI algorithms can be opaque and difficult to interpret. The concept of digital slavery emerges as a dark underbelly of the AI revolution in Africa. Low-paid workers, often from countries like Kenya and Nigeria, are employed to label data and moderate content for AI systems used by major tech companies. These workers, who play a crucial role in training AI algorithms, often face poor working conditions, low wages, and exposure to disturbing content. In a recent open letter to President Biden, 97 African workers accused companies like Meta, OpenAI, and Scale AI of exploitation akin to modern-day slavery. They allege sudden contract terminations, unpaid wages, and union-busting practices. As one worker put it, "When Rematask shut down, it took our livelihoods out of our hands, the food out of our kitchens. But Scale AI, the big company that ran the platform, gets away with it because it's based in San Francisco." This digital slavery not only exploits vulnerable workers, but also raises questions about the ethics of AI development and the true cost of technological progress in Africa. As we stand at the crossroads of innovation and caution, the path forward remains shrouded in uncertainty. the potential for transformative change is matched only by the risk of catastrophic failure. In the words of a leading African fintech entrepreneur, we're not just building a new financial system, we're gambling with the future of a continent.